exchange rate, trade flows, and also capital movement. This means it determines how currencies are valued, how countries trade with each other, okay, and how investment move internationally. So in a way, it acts like a framework that keeps global economic activities connected. Because countries are dealing with different currencies, the system also relies on major currencies for stability and transaction efficiency. Instead of using hundreds of different currencies for every transaction, a few widely accepted currencies help make the system more stable and easier to manage. Another important role is that it enables cross-border transactions and international economic cooperation. Without the system, it would be very difficult for countries to trade, invest, or even collaborate economically. So this is what allows globalization to actually function. All right. Now, within the system, we can clearly see that the USD plays central but increasingly challenged role globally. It is still the most widely used currency, but at the same time, we are starting to see other currencies slowly gaining importance. And if we look at the data, the USD account for around 58% of global reserve, remaining the leading currency. This shows that despite the challenges, it still holds a very strong position in the global economy. So overall, the system is still centered around the US dollar, but it is gradually evolving. Okay, now that we understand the system, let's move on to what makes a currency influential in the first place. When we talk about currency influence, it is important to understand that it's not just about dominance or being the most powerful currency. Okay, what really matters is how widely the currency is used. A leading currency widely used in international trade and finance becomes important because many countries rely on it for transactions, not just domestically but globally. At the same time, a currency must also perform its basic role well. It needs to function as a medium of exchange, a store of value, and a unit of account. This means it should be practical for daily use, reliable for holding value over time, and consistent for pricing goods and services. Beyond that, influence is not automatic. It actually depends on trust, stability, and also global acceptance. Countries and investors must feel confident that the currency will remain stable and usable in the long term. Because of this trust, the currency becomes used in global transaction, reserve, and financial markets, which further strengthen its position in the global system. However, it is important to highlight that even though the USD is currently the most influential currency, it is not uncontested. Okay, other currencies are slowly emerging, and this shows that influence can evolve over time. So overall, currency influence is not just about being dominant, but about being trusted, widely used, and deeply integrated into the global system. Now that we understand what makes a currency influential, let's look at why the US dollar specifically hold this position. All right. Now the question is, why the US dollar? Okay, and not other currency. So one key reason is that the US economy historically largest and most influential globally. So naturally, many countries begin trading and investing using USD. At the same time, the US has deep and liquid financial markets attract global investors, which make it easy for investors to move in and out without much risk. Another important factor is that political and institutional stability support currency confidence. Compared to many countries, the US system is seen as more predictable and reliable. Because of this, US assets considered safe during global uncertainty. So during crisis, investors tend to shift their money into USD. Okay, so and over time, this has created a cycle where strong historical usage reinforced global reliance, meaning the more people use USD, the more dominant it becomes. So overall, it's not just one. So overall, it's not just one factor, but a combination of size, trust, and long-term usage. Now let's see how this influence actually works in today's system. Okay. Now let's look at how the US dollar operates in global trade today. First, USD widely used in pricing goods and commodities globally. This means when countries trade internationally, especially for major goods, they often use USD as the pricing currency. Even if the trade does not involve the United States, USD is still used as a standard reference point. Second, oil and energy markets still largely priced in US dollar. You can see what happened now when we have the crisis now. Okay, this is extremely important because energy is one of the most critical resources in the world. Countries need oil and gas to run their economies. So when oil is priced in USD, countries must hold USD reserve to purchase it. This automatically increases global demand for the US dollar. Third, simplifies cross-border transaction and reduce conversion risk. Imagine if every country used a different currency for trade, it would be very complicated. Businesses would need to constantly convert currencies, which increases cost and risk. By using USD as a common currency, transactions become much simpler and more efficient. Fourth, use even when US not directly involved in trade. Okay, this is where the influence become very clear. For example, if Malaysia, okay, trades with Japan, they may still use USD instead of ringgit or yen. This shows that USD is not just a national currency, it's functioned as a global currency. So finally, some countries exploring alternative settlement currencies. Now this is where things are changing. Countries like China and Russia are trying to use their own currencies or alternative system for trade. This doesn't mean USD is disappearing, but it shows that countries are starting to reduce dependence. So what we see here is a system that is still heavily dependent on USD, but slowly evolving. Okay, now let's move into the financial side, which is even more critical. Okay, we are in slide 9 now. Okay, beyond trade, the role of the US dollar becomes even more significant in financial markets. Okay, first, USD remains key currency in global banking and lending system. Banks across the world use USD for international transaction, loans, and settlement. Many cross-border payments are conducted in USD, making it the backbone of the global finance. Second, used widely in international debt and financial contracts. This is especially true for developing countries. When countries borrow from international market, they often borrow in USD because lenders prefer a stable and widely accepted currency. However, this also creates risk, which we will discuss later. Okay, the large share of foreign exchange transaction involve USD. In fact, most global currency trading involve USD in one way or another. This shows how deeply embedded it is in the financial system. Okay, next, still seen as relatively safe asset during uncertainty. Again, during crisis, investors move towards USD. This reinforces its position because demand increase exactly when uncertainty is highest. So, increasing discussion on reducing over-dependence globally. However, there is a growing awareness that relying too much on one currency may not be sustainable. So we are seeing discussion about diversification and alternative system. So overall, USD is not just important, it is deeply embedded in global finance. Now that we understand its role, let's look at its current position globally. Now we move into the current position of the US dollar in today's global system. So far, we have understood how it become important. Now we look at where it stands today. Okay, let's start with the global reserve. Okay, first, USD still largest share of global foreign exchange reserve. Even today, central banks around the world continue to hold a large portion of their reserve in US dollar. This shows that despite challenges, USD is still widely trusted as a store of value. Next, share declining gradually compared to previous decades. However, what is interesting is that this share is slowly decreasing, okay, over time. For example, it used to be much higher in the early 2000s, but now it is closer to around 58%. This indicates that while USD is still dominant, its position is no longer as strong as before. Okay, and next one is central banks slowly diversifying reserve portfolio. Countries are starting to diversify by holding other currencies such as the euro or Chinese RMB. This is mainly to reduce risk and avoid over-dependence on a single currency. Okay, and next one, euro and yuan gaining limited but growing importance. Although these currencies are not replacing USD, they are becoming more relevant in certain regions and transactions. Finally, reflect shift towards more balanced currency system. So overall, what we see is not a collapse of USD, but a gradual shift towards a more diversified global system. Now let's look at how USD affect global liquidity. Okay, now let's look at the global liquidity and how the US dollar plays a role. When we can see is that the USD supply controlled by the US Federal Reserve policies, so decision made in the US can influence how much money is available globally. Because of this, the US dollar influences global liquidity and financial conditions worldwide, affecting borrowing, investment, and overall economic activity. When there is more USD in the system, it can support economic growth, but also create inflation pressures, especially if too much liquidity is injected. At the same time, this effect do not stay within the US. They impact economies beyond US borders significantly, particularly countries that rely heavily on the USD. So overall, this situation also raises concern about global dependency, since many economies are affected by decisions they do not control. Okay, now let's move on to how USD flows across global markets. Okay, let's look at how the US dollar actually moves across the global economy. What we can observe is that USD flows globally through trade deficit and investment. When the US imports more than it exports, dollars flow out to other countries. And at the same time, investment also spread USD across global markets. But interestingly, those dollars don't just stay there. They return through global demand for US financial assets, such as bond and other investment, as many countries and investors place their funds back into the US. Because of this cycle, USD continue to support global trade, financing, and capital movement, making it easier for countries and businesses to access funding. At the same time, this also reinforced the central role of US financial markets, since a large portion of global capital keeps flowing back into the US. However, what we are starting to see now is that there are increasing diversification trends emerging, where some countries are slowly trying to reduce reliance on USD. So overall, USD doesn't just circulate, it moves in a cycle that strengthens its position in the global system. Now that we understand this, let's move on to the next part. Okay. When we look at the role of the US dollar in global trade, one of its biggest contribution is efficiency. Okay, because it is widely used, it reduces currency conversion complexity in international transaction. So businesses don't need to deal with multiple exchange processes every time they trade. Okay, at the same time, it provides a common pricing system for global goods and services, which make it easier for countries to compare prices and conduct trades more smoothly. This also helps to enhance efficiency and transparency in trade activities since transactions become more standardized and easier to track. For businesses, it is useful because it helps manage exchange rate risk effectively, reducing uncertainty when dealing with international partners. And overall, all of these contribute to global economic integration, where countries become more connected through trade and financial activities. So, in simple terms, the US dollar helps make global trade faster, easier, and more consistent. Okay, now let's look at another important role of the US dollar. Okay, one of the important role of the US dollar is the ability to provide stability in the global financial system. In many situations, the USD often acts as a safe haven during global uncertainty, where investors shift their fund into dollar-based assets to reduce risk. During financial crisis, it also provides liquidity support, helping markets continue functioning even when conditions are unstable. At the same time, it helps stabilize exchange rate in volatile markets, especially for countries that hold USD reserve to manage fluctuation. Because of this, many central banks rely on USD reserve for security, using it as a form of financial protection during uncertain period. So overall, the US dollar is still considered relatively stable compared to alternative, which is why it continues to be widely used globally. So even with challenges, stability remains one of its strongest advantages. Okay, so what is the role of the US dollar? The US dollar actually play a very important role in global financing. It enables countries to access international financial market, making it easier to raise funds from global investors. At the same time, it attracts foreign investment into developing economies, especially because USD is widely trusted. This helps to support infrastructure and economic development as countries can finance large projects and growth. In addition, the dollar provides liquidity for global financial system, ensuring funds are available when needed. And overall, it enhances global investment opportunities, connecting investors and economies across borders. So in simple terms, USD makes global financing more accessible and connected. Okay, now let's move on to the risk involved. Okay, one key issue in the global system today is dependency on US dollars. Okay, many countries depend on the US monetary policy decision, even though they do not have control over those decisions. Because of this, because of this, Federal Reserve action influence global interest rates, affecting borrowing costs not just in the US but worldwide. Okay, this situation can limit policy flexibility in developing economies as they need to adjust based on external changes. At the same time, it creates vulnerability to external economic shocks, especially when there are sudden changes in the US economy. So overall, this also raises concern about systemic dependency, where too much reliance on one currency creates global risk. Okay. So while USD provide benefit, it also creates significant dependence. So let's look how this lead to specific economic pressures. Okay. Exchange rate movement create real pressure on economies. When the dollar strengthened, it increased cost of import for many countries, especially those dependent on foreign goods. Okay. At the same time, this led to inflationary pressures in weaker economies, so prices begin to rise. It also impacts businesses with foreign currency exposure, making planning more difficult. Overall, this situation creates economic uncertainty across markets, especially during volatile periods. So exchange rate changes directly affect both countries and businesses. Okay, now let's look at one of the most critical risks, which is debt. Okay, one of the most serious issue related to the US dollar is debt. Okay, many countries borrow using USD denominated debt because it allows them to access international funding more easily and often at lower interest rate. However, problems arise when their currency weaken. In that situation. Currency depreciation increase the repayment burden significantly, meaning countries need more of their own currency to repay the same amount of debt in US dollar. This creates a high risk of financial crisis in emerging economies, especially when they are unstable to generate enough foreign currency to meet their obligation. A clear example is the Sri Lanka debt crisis. Okay, Sri Lanka had accumulated a large amount of external debt in US dollars. When its currency depreciation and foreign reserve declined, it struggled to pay for essential import such as fuel and food. Okay, at the same time, its debt repayment became more expensive, and eventually, what happened in 2022, the country defaulted. Okay, so the case clearly showed that dependence on US dollar debt can turn into a major economic vulnerability. So now let's look at the another dimension, power and influence. Okay, the US dollar also create imbalance in the global system. The US gains advantages from issuing widely used currency, giving it more flexibility than other countries. It can also finance deficit more easily than other countries because demand for USD remains high. At the same time, sanctions influence access to global financial system, limiting some countries' participation. Developing countries, however, have limited influence in the system, even though they are affected by it. So overall, this creates imbalance in global economic power. Now let's move into real-world event. Now we move into real-world example to better understand this impact. Okay, the role of US monetary policy is very significant globally. We can see that the Federal Reserve decision impact global financial market, not just the US economy. Changes in interest rate also influence global capital flows as investors move funds across countries. This then affect exchange rate and investment decision worldwide, shaping economic condition. At the same time, it creates spillover effects across multiple economies, especially developing countries. So this clearly demonstrates the global reach of US policies. So now let's connect with this geopolitics. Okay. Before we move into sanction, it is important to understand how geopolitical tension can influence the US dollar. Conflicts such as Middle East tension now affect oil and USD demand, okay, because global oil trade is still largely priced in US dollar. At the same time, strategic region like Strait of Hormuz, I'm sure that you heard about this very frequent now, Strait of Hormuz, influence global trade flows, especially for energy supply. Any disruption, they can affect global markets and create uncertainty. When the uncertainty increases, volatility also increases in currency market as investors react and adjust their position. Because of this risk, some countries reduce reliance on USD due to these uncertainties. although this shift is still gradual. So overall, this shows the link between geopolitics and currency system, where global events can directly influence how currency behave. Now let's look at how this influence become more direct through financial sanction. Okay, let's look at how the US dollar operates beyond economics, particularly in the context of financial sanctions. Okay, what we can see is that the USD-based system allow the US to influence or restrict access to global financial network, since many international transactions still rely on the dollar. Because of this, countries facing sanction often seek alternative payment system in order to continue trade and financial activities. So, a clear example is Russia shifting from USD settlement. After sanction were imposed, Russia faced limitation in accessing certain financial system, making USD transaction more difficult. In response, Russia began increasing the the use of local currencies and strengthening trade arrangement with countries like China. Okay, however, this shift remained partial as the global system is still largely depending on the US dollar. At the same time, the situation encouraged gradual diversification of currency usage globally as other countries becomes more aware of this risk. So overall, this highlight the geopolitical dimension of the monetary system where sorry, I'm almost done. Oh, thank you. So overall,
It's
this
fine.
highlights the geopolitical dimension of the monetary system where currency is not only economics but also linked to global power and influence. Okay, now let's look at how other countries, especially China, are responding to this issue. Okay, when discussing effort to reduce dependence on the US dollar, China is one of the most important countries to observe. All right, China is actively promoting RMB yuan usage in international trade, particularly through regional partnership and strategic agreement as part of the broader effort to increase its global financial influence. At the same time, we are seeing the bilateral trade agreement increasingly use local currencies, meaning transactions do not always require conversion into USD. This helps reduce costs and also lowers exposure to exchange rate fluctuation. All right. As a result, there is a gradual move to reduce dependence on USD-based transactions, although this process is still developing and not yet widespread. However, it is important to emphasize that this shift remains limited. The US dollar is still dominant, and alternatives have not yet reached the same level of global acceptance. So overall, what we are observing is a slow and gradual transition rather than a complete replacement of the US dollar. Okay, now there are a few more slides about to finish. Now let's move into the broader trends affecting emerging markets, because we are talking about our markets, right? Malaysia, Indonesia, and so on. So we move into the final section, which is where we look at the emerging trends in the global monetary system. All right. So one of important trend is how the strength of the US dollar affect developing countries. This is very important to look at. When the dollar becomes stronger, it increases financial pressure on the developing countries, especially those with USD debt. Okay. At the same time, currency depreciation raises inflation and import costs, making goods more expensive domestically. We also see that capital flow shifts toward the US during policy tightening as investors move their money to safer or higher return markets. Because of this, many emerging economies face economic instability risks, particularly during period of strong USD. So this shows how interconnected the global system is and how changes in one currency can affect many countries. So now let's look at how countries are responding to this. In response to these challenges, countries are starting to explore alternative. All right. We can see that countries exploring alternatives to reduce USD dependence, especially in trade and finance. There is also increased use of the local currencies in trade agreement, which have reduced reliance on USD. At the same time, you observe the growth of RMB and regional financial system, although the influence is still limited compared to USD. The changes are driven by geopolitical and economic consideration as countries aim to reduce risk associated with dependency. However, it is important to understand that that this is a gradual process. So overall, this suggests diversification rather than replacement of the US dollar. Okay, so what does this mean for the future? Okay, looking ahead, the role of the US dollar is likely to evolve rather than disappear. All right. In the near term, the USD likely remain important in the global system as it is still widely used and trusted. At the same time, no single currency is ready to fully replace USD as alternatives still lack the same level of global acceptance. However, we are seeing a gradual shift towards a more diversified system where multiple currencies play a role. All right. There is also growing interest in digital currencies, which may influence future development in the monetary system. So overall, we are moving towards a more multipolar structure rather than relying on a single dominant currency. So why this multipolar structure is very important because it provides diversification. So let's conclude the session. Okay, to conclude, the USD remains central but increasingly challenged globally, meaning it still plays a major role, but it is no longer uncontested. Okay, all right. It provides stability but create dependency risk, especially for countries that rely heavily on it. We can also see that developing economies are most vulnerable to USD movement due to their exposure to debt and exchange rate changes. At the same time, the global system is gradually becoming more diversified with more currencies being used. So overall, the future is likely to involve shared influence among multiple currencies rather than one single dominant system. Finally, I would like to say thank you for everyone here in the Zoom meeting for your attention. With that, thank you so much for listening. Assalamualaikum warahmatullahi wabarakatuh.
Assalamualaikum warahmatullahi wabarakatuh. Thank you so much, Prof. Satina, for your insightful presentation. So now we have arrived into the Q&A session. I think your presentation is highly related to our current geopolitical situation that we have war between US and Israel and also Iran. Yeah, so I hope this will get a number of questions from the audience here. All right, then. Now we move to the Q&A sessions. Anyone who has question, please. You can, by the way, you can deliver your questions. I think you're fine if they deliver the questions in Bahasa, right, Prof? Or you can deliver, I mean, you can drop your question in chat box if you're not confident enough. And also you can raise your hand to deliver directly to Prof. Satina Ismail. Please, everyone. We have more than 150 participants, so we hope to have several questions in this session. Okay, anyone, please? Hello. Okay, we have one question, Prof, from the chat box. So the question was from Rendra Dwi Saputra. He is asking about, is it possible for BRICS countries, currencies to replace the dollar's dominance? So there was initiative for BRICS currency. What do you think on that, Prof?
Is it, no, Dr. Amin, can you repeat the question?
Is it possible for BRICS currency to replace the
Okay,
dollar's
okay.
dominance? Yeah.
Well, uh, may I know who asked this question? Can you?
This one is from brother Rendra Dwi Saputra.
But which one? Can I see the face?
Okay. He
Okay,
just dropped.
Salva, is it the one who raised?
We have another one. This one is from our sister Salva. She raised her hand.
Okay. You want me to answer this question first, or may I know the name? Alan Firmansyah, right? No.
Oh no, this one. This one is
Oh,
from
Trinora Dwi Saputra. Okay.
in the chat
Okay.
box. Yeah.
Okay, chat box. Okay, sorry. I didn't open the chat box. Okay. Rendra, you are postgraduate student or lecturer, docent, or?
I think he's a student, undergraduate student.
Okay, all right. So your question is it possible for BRICS currency to replace the dollar dominance? Okay, okay. Let me give my own view ya. Rendra,
Rendra.
Rendra. Okay, okay. First, okay. The US dollar dominates today because of deep structural advantage, okay? Because it's the main reserve currency held by central bank, okay? You have to remember that. And then global trade, especially oil, is largely priced in US dollar. And the US financial markets are the most liquid and trusted. And strong institution and rule of law support the confidence of US dollar. Okay, now the BRICS group, I'm sure that undergraduate students also learn about BRICS. It consists of Brazil, Russia, India, China, South Africa, now expanded, right? Has been exploring alternative, okay? So this group, they explore alternative trade in local currencies such as yuan, rupee, and so on, reducing reliance on SWIFT, especially after sanctions on Russia, and then discussion about the potential share currency or settlement system. So, but Rendra, there are major obstacles. Okay, this is my opinions. There are major obstacles. Lack of unified currency system. Okay, unlike the euro, okay, BRICS counts are economically and politically diverse. All right, there is no central bank or monetary union. Okay, and then in terms of trust and transparency issues, global investors trust US institution more than many BRICS system. So currency dominance depends heavily on confidence, not just economic size. All right. And besides that, in terms of capital control, okay, especially China. So the Chinese yuan is increasingly used, but China still restrict capital flows. So that limit its ability to become a true global reserve currency. And as I mentioned just now about the geopolitical fragmentation, BRICS countries don't always align strategically. Okay, internal differences weaken collective financial power, and also they saw a few things. And last but not least, I think that network effects. Okay, network effects. The dollar dominance is reinforcing. Okay, because everyone use it, others continue to use it. So that's it. That change is happening. The US dollar share of global reserve has slowly declined over time. Bilateral trade in non-dollar currency is increasing. Countries facing sanctions are actively seeking alternative. But if you ask me, there's a lot of obstacle before it can like replace the US dollar. Okay, Rendra, right? Am I mentioning the right pronunciation?
Yeah.
Rendra, okay.
Yeah, Rendra.
Am I
All
answering
right.
your question, Rendra? Am I answering your question?
Hello, Rendra. Are you with us? So he's so sorry to open his camera, perhaps. Okay. Let's move on, Prof. Let's move on to another question. Before we go to the other question, let's give time to our sister who raised hand here. Salva, are you here?
I
Yeah,
think
Bang. Yeah.
I read one question in the chat box on the mm, with the conflict in the Middle East and the Iranian governance allowing ship to pass through in yuan, will the dollar's position be threatening? Is from me, 𝗚𝗂𝗟𝗏𝗂𝗏𝗂𝗏,
Yeah.
right?
So,
Okay.
yeah.
Ilham, okay, I hope that you, okay. I will give you a very short answer because there's so many questions down there. Okay, to answer your question, correct me if I'm wrong, because my understanding is your question is referring to the Middle East conflict right now and the Iranian government allowing ship to pass through in yuan. Will the dollar position be threatened? That's what you miss that. It will affect a dollar or not, right? Ilham? Okay. Let me give you my view, okay? The US dollar dominates global finance not just because oil is priced in dollars, but because of deep liquid financial markets, okay? And also strong legal and institutional framework, again, network effect, okay? So even if some oil or shipping transaction shift to yuan, that alone doesn't replace the broader system supporting the dollar. Okay, countries like Iran, often under sanctions, have incentive to bypass the dollar system. Okay, accepting yuan or other currency will help them avoid US controlled financial channels, trade more easily with China. But Iran is not a central pillar of global finance. Its choice matters symbolically more than systematically. Okay, China long-term push. Okay, this move fit into a broader strategy by China to internationalize the yuan. Okay, by expanding cross-border yuan settlement, encouraging energy trades in yuan, building alternative to SWIFT, you know. But still, the yuan still face major limitation, capital control. Okay, I'm sure you understand how the capital control works. And less transparent financial system and fewer trusted liquid asset comparable to US treasuries. So, until those change, global investors are unlikely to trade the yuan as a full substitute. Ilham, that is my opinion. All right. Okay. What else? The question will let me put the question. With the extension, let me read the next question. Is it okay, Dr. Amin?
Sure. You want to give a time for those who raise hand to deliver questions directly to you?
Maybe because I think there are two questions left in the chat book.
Okay.
Let me finish this
All right
first.
then.
Okay.
Okay.
Will tension in the Strait of Hormuz strengthen the dominance of the USD through petrodollar mechanism and safe haven flows, or instead act as a catalyst for accelerating the dollarization of global energy trade?
Global.
Okay. Whose question is
Egi.
Eki? Okay, Eki. I hope that this is my feedback from your question. Okay, it can pull in both direction at once. Okay, and that exactly what tend to happen in practice. Okay, the short-term effect usually strengthen the dollars, while the long-term effect can nudge the system toward diversification. Okay, how the short-term work crisis tend to reinforce dollar dominance. Okay, if tension rise in the Strait of Hormuz, a corridor for a large share of global oil, market typically react in a very predictable ways. Iki. Okay, so flight to safety, USD demand rises, investor move into US treasuries and dollar liquidity during geopolitical shock. Oil price spike, more dollar usage. Most global oil contracts are still priced and set in USD, so higher prices mean more transactional demand for dollars. And then financial plumbing favors USD. Shipping, insurance, trade finance, hedging markets are still heavily dollar based. reinforcing its role during volatility. So, in the immediate phase of the crisis, the dollar often benefits from it. All right. So, for long term, we can say that repeated shocks encourage hedging away from USD, where things get more interesting. In over time, 𝗚𝗂𝗏𝗧, sanction rates become more salient. All right. Countries that fear being cut off from dollar system look for alternatives. So energy trade diversification also grow. Bilateral deals, for example, some price in yuan or other currencies become more attractive, especially those involving China. Payment system fragmentation. As I mentioned just now, alternative to SWIFT and dollar clearing gain incremental traction. So this doesn't mean country abandon the dollar. It means that they reduce dependence on the margin. So if we talk about why de-dollarization still have limit, even with rising tension, the US, they provide the deepest pool of safe asset, 𝗚𝗏𝗏𝗏. The yuan isn't fully convertible and lack comparable global trust liquidity. Network effects are hard to unwind. Global trade, finance, and reserve are still deeply dollar-centric. So, think of it as a balance between two forces. So, crisis dynamic, USD positive, risk aversion. All right. As I'm sure you learned in the class, liquidity demand, established infrastructure, strategic adaptation, USD negative, sanction avoidance, geopolitical blocks, currency diversification. So the bottom line here, 𝗚𝗏𝗏𝗏𝗏, is tension in the Strait of Hormuz are likely to boost the dollar in the short run, even as they quietly accelerate long-term effort to reduce reliance on it. All right, 𝗚𝗏𝗏𝗏𝗏. Okay, 𝗚𝗏𝗏𝗏𝗏𝗏, sorry, I thought 𝗚𝗏𝗏𝗏𝗏𝗏. All right, I think one last question, Dr. Amin, because I have to go by 12. I have to, am I too fast answering
No,
the
no, no, it's fine, it's fine.
Who want to ask question? Oh, there's one more question in the chat box.
Yeah, keep raising the questions. So after 𝗚𝗏𝗏𝗏𝗏, there is another one.
Oh, there's a lot of question. There's a lot of question anymore.
You can just pick one or two. Then the other one is from
I pick
our yeah.
another one. Okay. Okay. The next question is if ASEAN, especially Indonesia, does not depend on the US dollar, is that possible? Soalan. If ASEAN has equal currency for transaction within ASEAN, what do you think? Is that possible? Okay, let me be honest, Muhammad Zidane, or your name similar to football player Zidane. Okay, okay. Okay, this is my opinion. Okay, because Malaysia and Indonesia, we are like brothers. You know, we are almost similar. Just like you are like 10 times bigger than us. Okay. Okay, a full break for the US dollar for ASEAN, especially for a large globally integrated economy like Indonesia, is not realistically achievable in the near term. But partial reduction in riots, that's already happening, and each much more plausible. Okay. Okay, now Zidane, let's separate the two ideas, not depending on USD, or the second one, creating an Asian-wide currency. Okay, can ASEAN, like Indonesia, avoid depending on the USD? Not fully. This is my opinion, but it can reduce exposure at the margins. Okay, why the dollar still matters? Because most global trade, especially commodities like oil, palm oil, is priced in USD. Financial market, debt issuance, reserve hedging are still dollar-centric, and the USD is backed by deep liquid asset. Okay, even in ASEAN countries such as Indonesia trade more in local currency, they still import energy price in USD, borrow in the global market influenced by USD rate, and hold reserve partly in USD for stability. So, but ASEAN is already moving towards diversification, okay, such as local currency transaction. Contoh local currency transaction framework between Indonesia, Malaysia, Thailand, and bilateral trade settlement in local currency using Indonesian rupiah, Malaysian ringgit, Thai baht, etc. and regional payment linkages, QR system, cross-border instant payment. Okay, this reduce transactional dependence, but not systemic dependence. Could ASEAN create a common currency? This is much harder and unlikely anytime soon. Okay, compare it to the European Union and the Euro. ASEAN is far less integrated, different political system, wide economic gap, no strong central fiscal authority, and also limited labor and capital mobility compared to Europe. All right, Zidane, am I answering your question? I think last one year, Dr. Amir, I have to go.
Sorry, Prof. Safina, should we give a chance to the one who raised hand?
Oh yeah, sure. Anyone raise the question? Oh, Salva Maulida, yeah?
Yeah.
Salva,
Okay,
Salva
Sister Salva,
Maulida,
please.
please. Oh, you raised. Sorry, because I couldn't see from here, Dr. Amin. I couldn't
Okay.
see from here who raised the.
Yeah, it's okay. Okay, Salva, are you here?
One last question, Salva.
Okay,
Yeah. Okay.
Okay, thank you for the opportunity. So, Mom, I think that's really amazing topic. So, I have two questions. Like you all know, the US dollars have a dominance, like America.
I didn't get you. Can you speak slowly because the sound is like can you read slowly? What is your question? Okay.
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 Okay. I mean, like we all know, the US dollars have their dominance. Like America, maybe, Canada, they export it is inflation to other countries, right? So, when the Fed raises the interest rate, our currency get weakened. Nah, so my question is, from political economic view, isn't this just basically a modern form of structural power where the rules are made by and for the US?
Can you write down your question because I couldn't hear you clearly?
Okay. All right then. Salva, can you write down your questions in the chat box?
Yeah, because I couldn't hear you clearly. What your name is? Salva Molida. Can you write down your question so that maybe I can answer it clearly to you because I couldn't hear your voice clearly because it sounds very, maybe it sounds
far or something.
Yeah.
Okay, wait.
Yes, I'm waiting. Last question, yeah.
Yeah,
I got to go because I have another meeting.
Okay.
Send regard to Prof. Anang as well, yeah. Prof. Anang,
Sure.
Prof. Anwar, and also the whole team, Professor apa ya ibu tu Dr. Amin.
Prof. Susanti.
Prof. Susanti, yeah, can send regards to all of them.
By the way, see you next week, Prof. In Malaysia. We are going into Malaysia next week.
Are you coming? When?
Yeah, next week. Next week.
Send me the details. Send me the details because.
Sure. I think it's on 5th of May around 9 a.m. I guess. Yeah. I have contacted I have an appointment with Dr. Azlin, Dr. Becky. Yeah.
Okay. Morning, yeah? Morning.
Yeah, morning. 5th of May morning.
Sure.
Hope to see you there.
Send me the details. Sometimes they didn't tell me. Send me the details. Maybe because they check my schedule is full, so they didn't tell me. So send me the details. So I try to squeeze my schedule to see you. All right. Okay. Sure. Yes. Salva, the British Salva Maulida. Okay.
Oh, where Miss? I'm still writing my question.
Where is it?
Oh, wait.
Huh?
But if I speaking like this, is it clearly?
What did she say, Dr. Ami?
She want to. She's writing, but she's trying to deliver the questions directly. Salva, can you write down your question in the chat
Iya,
box?
Bapak masih mengetik. Ini agak panjang.
No, you
Make it simple.
No, make it simple. Try to simplify your question.
Yeah.
You have to learn how to simplify your question.
Okay, wait. Now I'm waiting for my second question.
Okay. There we go.
Please, because it's already 12.
Yeah. The first question is in the chat box, Prof, if you don't mind.
Yeah. Oh, we all know the US dollar. This one, right? Salva Molina.
Yeah.
Okay. Let me read your question. Try to understand your question. Okay. We all know the US dollar dominance. America can export its inflation to other countries. But when the Fed raises interest rate, our country get raised. The question is, from a political economic view, isn't this basically a modern form of structural power where the rules are made by and for the UN, what the actual realistic pathway for country in the global south to reduce the like World Bank are still largely US aligned? Okay. Actually, you are right because you frame it as the structural power. This is exactly how many political economists describe it. We call it structural power. So the global role of the US dollar, if the United States actually, Salva, influence, it doesn't require direct coercion. It's embedded in how the system works. So when the Federal Reserve raise interest rate, global capital tends to flow back into the dollar asset because they are safer and now yield more. Okay, so when we talk about exporting inflation, that triggers the currency depreciation in emerging markets, kan, macam like our countries, higher cost of servicing dollar denominated debt and imported inflation since commodities like oil are priced in dollars. So, okay, from the structural power angle, since you bring the structural power in your question, okay, scholars usually argue this isn't accidental. It reflects how institution and market are structured. So the dollar dominates trade, invoicing, reserve, and finance. Institutions like the International Monetary Fund and World Bank were historically shaped by the US and interest. So crisis responses over reinforced dollar centrality. So country borrow in dollars. They need more dollars. And so yes, it's a form of structural advantage, so that the US set key rules of the game simply because others rely on its currency and financial system. So that said that calling it pure exploited, we call it exploitative, right, Salva, can oversimplify things. The system also persists because it's offer real benefit, deep liquid financial market in the US, and also a widely trusted legal system and also relative political stability. So when we talk about why can global south countries realistically do? Okay, there are few reasons. Diversify reserve and trade currency. Some countries are gradually reducing reliance on the dollar, holding more euros, gold or yuan, settling bilateral trade in local currency. So even effort tried by groups like BRICS fall into this category, but the scale is still limited, Salva. The dollar remains dominant because network effects are hard to break. Okay, and then in terms of regional financial arrangement, alternative to IMF style lending are slowly emerging. Regional swap lines, development bank outside the traditional system. So this reduce reliance on institution like IMF, but they are not yet large enough to fully replace them. Okay, and what else? Oh, okay. Develop domestic financial market. So this is less flashy, but arguably the most important, borrowing in local currency instead of dollars, and also deepening domestic bond markets and also strengthening central bank credibility. So, and then so many things, Salva, capital flow management, industrial and trade strategy. And bottom line, what I can say is as a conclusion, what you are describing in your question, Salva, just now fit well within the idea of structural power. The dollar system gives the US outsized influence over global financial condition, but it's not just imposed, it also reproduced by market preference and institutional inertia. So for the global south, the realistic path isn't a clean break, yeah, Salva, is gradual diversification, stronger domestic institution and regional cooperation, chipping away at dependency rather than escaping it outright. Okay, so I think am I answering your question, because this is what happened realistically. All right, Salva, I have to leave now. Thank you so much, everyone.
All right. Thank you so much, Prof. Safina, and thanks everyone. With that, we conclude our session today. Again, thank you so much, Prof. Safina, for joining us today for the sessions. On behalf of the departments, and here we have our head of departments, Pak Tony. Thank you so much, and see you again on the other occasions. Stay healthy, everyone. Apologize for any mistakes and shortcomings. See you. Bye-bye. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Prof. Safina.
Thank you.
Salam.
Salam. Thank you, Prof.